very good evening, friends. This side Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting, and also a venture capitalist. As we speak, Treasury Consulting is a multinational headquartered group based out India, Singapore, and Hong Kong. More importantly, we are having offices in three parts of the globe, and we have clients serving across. We do hold our own hedge fund, which includes the equities desk, the commodities desk, penny stocks, but it is a prop. More importantly, we also own our own OTT platform over the top, just like Amazon Prime and Netflix, but it is not as big as Amazon Prime and Netflix. The OTT platform name is LTFX Academy. Apart from that, we're holding our own learning platforms, which is Sheetal Academy. And more importantly, we are also holding our own fixed income platform, which is www.fixedincome.global. If you wish to have more information about our products and services, our contact details is mentioned at the last page of the book. You can definitely look at that. Today I would like to cover a very detailed topic which is on the FICC desk, which is fixed income currencies and commodities. Although I talked about FICC many times on my YouTube videos. We know that every bank in the world is supposed to declare his results, which is quarterly results and the yearly results. This is a regulatory compliance. Just like in this quarter, when we speak US banks like Goldman Sachs, JP Morgan, Citi, Wells Fargo, Morgan Stanley, they all declared their results. On the contrary, Indian banks also, which include ICICI Bank, Axis Bank, Yes Bank, Kotak Mahindra Bank, HDFC, they also declared their results. While the reality as we speak, and I know that after listening to the reality, many people feel offended as usual. The reality is that the way Indian bank disclose the information, this is not a banking reporting, this is a circus. On the contrary, the way American bank report the information, it looks like a holistic book to be taught to MBA students. I don't know how many of you ever got a chance to look at the annual report of an American bank, which is known as 10K, and the quarterly reporting of an American bank, which is known as 10Q. It is more than 400 pages in case of Goldman Sachs and JP. And if I look at the HSBC annual report, then it is not a book, rather it is a fantastic report. In fact, to be very honest, I rate HSBC annual report better than Goldman and JP Morgan, the way they disclose the information. And I'm sure that 99.99% people, those who watching this video, they never got a chance to look at the annual report of the HSBC. By the way, this is available free of cost on their website. And if you look at this report and just went through this report line by line, of course, it is a time consuming exercise. You will learn so many things that even MBA cannot teach you these things. And of course, but that is we really need to appreciate that you need a very strong financial knowledge to understand these reports, because after all the banks which I mentioned, whether this is Goldman, JP, Citi, Morgan, Barclays, HSBC, they are very big, and there is nothing in the banking which they are not doing. By nothing in the banking means they are into wealth management, they are into the foreign exchange, they are into commodities platform, they are into trading, they have their own proprietary engines, they have their own proprietary desk, they are into M&A, they are into advisory, they are into capital markets, they are doing almost everything. To be honest, Goldman is 150 years plus old firm. How many companies even dare to survive 150 years? Many companies crashed after the founder passes away. But Goldman is 150 plus, which himself determines that how strong the organization is. They withheld almost 2000 financial crisis, which is known as the internet crash, dot-com crash, 2008 well-known financial crisis, 1930s financial crisis, and now this the so-called corona. In fact, in so-called corona, Goldman and JP, they just made it, guys. If you look at their FICC revenue, you would be surprised that whether there is any corona or not. The way they use digitization to accelerate during COVID is an exemplary work. And if we compare this with the Indian bank, then this is called stupidity on the side of an Indian bank. But still, I know that many people feel offended. Yeah, Indian media will continue to praise Indian banks, and you know how it works. It's all money. It's nothing. You give the money to the Indian media, and they never put inconvenient questions to the Indian banks, and it would never happen. But anyways, all the big banks of the world, just like, of course, the size of the screen is limited, so I cannot mention everything here. But all the big banks like Goldman, JP, Citi, Morgan, Barclays, HSBC, they hold their FICC desk. Rather, they're not one of the, rather the most important parameter to judge their performance, either it's a quarterly performance or it's an yearly performance, is you know the FICC income. FICC stands at fixed income currencies and commodities. So maybe quarterly, maybe yearly, they report their FICC income. Example, Goldman say this is $10 billion for the year. Market already estimated it. Suppose market estimated 9 billion and Goldman reported 10 billion. It means Goldman did well. It means Goldman earned more money by trading compared to what market envisaged. Vice versa is also possible. So the trading it would continue for Goldman. By the way, I don't think that this small screen is able to justify the FICC for these banks when the 10Ks were in more than 400 pages. But still, FICC stands at fixed income, currencies, and commodities. And to be very honest, I think and I believe that the way American banks and few European banks like Credit Suisse, your Barclays, the way they are assessed, this should be a global parameter, but it would never happen. None of the Asian banks, including the Singaporean banks, they are assessed on FICC benchmark. Because if we say FICC, then Asian and of course, especially Indian banks, they are far away from US banks. It is like comparing diamond with a stone. As simple as that. And there is no comparison of diamond and a stone. Diamond is diamond, priceless, while stone is stone, priceless. I don't want to use other word. When we speak about currencies, then the currency trading is divided into three parts. Number one, STFX, which is short-term FX trading. FX stands for foreign exchange. And India is an exception where people are using Forex, Forex, though the right word is foreign exchange. But I don't know who invented a word called forex. Such inventions can only possible in India, because the right word is the foreign exchange, or shortly FX. Currency trading is divided into three parts, which is STFX, short term foreign exchange, MTFX, medium term foreign exchange, and LTFX, long term foreign exchange. Traditionally, it is unsaid, and but it is not written in the sense, like, there are many things in the world which are not yet documented. But STFX is always 0 to 1 years, while the MTFX medium term is 1 to 5 years. On the contrary, LTFX, which is the long term, it is more than 5 years. Before you make any conclusion, please remember that the big banks, they are active not only in STFX, MTFX and LTFX segment. Rather, there is a spread strategies which they are taking, which we are not covering in this video, which includes buy in STFX, sell in LTFX, and reverse that. But this can only possible by the big banks. Forget the Indian banks, and neither Indian banks will explain this, to be honest. The video is shot on 31st July 2021, which is Saturday. I took the data from Reuters, and these are all the figures. The 10-year forward premium of GBP dollar is 777, which is 777 bips. Bid and ask is 900. While Euro dollar 10-year is 1830, which is 18.30 big figures and 19 big figures. The CHF Swiss franc is minus, Japanese yen minus, Canadian dollar figure is given. The bid ask spread, like 900 minus 777, 1900 minus 1830, and plus 50 is 1350 minus 1300, because in negative we go in a different way. 99% of the people who watching this video, they're not even aware that there are many currencies in the world as we speak. They are having negative premiums, including Japanese yen, Australian dollar, New Zealand dollar, Swiss franc, and many. In fact, Canadian dollar were also negative, but from the last 1 to 2 weeks, it somehow came into the positive territory. Somehow into the positive territory. So this flip-flop continue for Canadian dollar. Now the issue is that, and this is a very important thing we need to understand, is that negative premium trades. People believe that negative premium do not trades. Negative premium trades, but there is a way we treat the negative premium, and there is a way we treat the positive premium. So for currencies like Swiss franc, Japanese yen, if we have a negative premium, that doesn't mean that it do not trade. The big boys like Goldman and all, they do trade that, but you need an extensive skill set to understand how exactly it works. When we speak about LTFX, which is long-term FX, generally it is divided into three parts, which is known as the spot trading. Buy and sell at the same point of time, and it happens just like give an example of many a times when the forward premiums long term. Example, Boris Johnson coming on the TV and he's saying that he's not interested to continue with the corona lockdown. The first impact would not on the short term premium, rather on the long term premiums. And the big banks like Goldman, JP, they know how to take this. They are having expertise in that. Another is the forward trading. They keep doing forward trading, sometimes for themselves, sometimes for their clients, and sometimes for both. And of course, one of the favorite things which they taught to the world, something which the world never understood even today, something which American banks are having an extreme expertise, as compared to any other Indian banks, which is your so-called options trading. There is hardly any options which American banks are not dealing with. Hardly any options. American banks are dealing with those options which are neither understood by anyone even today. And that's the reason that most American banks are having their prop engines. Now, the prop engine means that it is an engine which is designed for the in-house pricing. Even though the world they have Reuters, not one license, many licenses of Reuters, Bloomberg, you know, but they rely on the prop engines. And by the way, designing prop engine looks very easy, but actually it is not easy, to be honest. So, and sometimes the pricing happens in the interbank desk. Though your engine is giving a pricing, but the interbank desk is having some or another form of conflict, so you take the pricing from the interbank desk. Let it be honest. As we speak, the pricing of LTFX dependent on many factors. Number one is definitely the Thomson Reuters. Number two is definitely the Bloomberg. Number three is the prop prices. All top American banks are having their prop prices, and only these banks can make it. You need an extensive knowledge and expertise to develop a prop pricer. Of course, when you develop the prop pricer, there are interpretation issues. And idiots will always come and say that your pricing is not tallied by Reuters or Bloomberg. But this can only be done by idiots because they do not even know how prop prices looked at. Anyways, the pricing is also dependent upon key factors, just like the sign is the master service agreement. And as we speak that the world is moving from SOFR, from LIBOR to SOFR. Yesterday there was a complete interview of ARRC committee head, which is Alternative Risk Reference Rate Committee. It's by Morgan Stanley, you know, and he was also sharing his opinion about the LIBOR transition. The pricing is also dependent on signed credit support annex, interbank credit spread, and most important, implied volatility. Implied volatility is always the most discussed topic as far as the FX option is concerned. Hell lot of issues we have when it comes to computation of implied volatility. But the big banks know how to live with this. So when we speak about pricing, it completely dependent upon three. By the way, it's coming from three. It is either Reuters or Bloomberg or prop pricers. It further depends on is the master service agreement signed between the clients, the credit support annex, and more importantly, the interbank credit spreads. And of course, implied volatility play a very important role. Let it be honest. Interbank credit spread, again, the screen is small. I cannot share everything. Example, you know, few I name, example, single name CDS, multi-name CDS, single basket CDS, multi-basket CDS, single trigger CDS, multi-trigger CDS, FTD, my favorite, first till default swap, second N means nth till default swap, and now they are talking about, and they should talk it about, which is the so-called valuation adjustment. Now you must be thinking, what are these? They are debit valuation adjustment, credit valuation adjustment, capital valuation adjustment, funding valuation adjustment, margin valuation adjustment, and the new party joined the game, which is nothing but the capital valuation adjustment last. So the long-term trading, which is currency trading, which is happening, it's just a demo. It's a hell lot of thing for American bank, and I think American banks are very wonderfully, they are highly equipped to handle such kind of thing. The way they demonstrated their expertise during Corona is something which is, to be honest, to me at least, this is exemplary. But I know that the Indian media will never appreciate American banks. They keep appreciating Indian banks. That's how it works. This is Rahul from Treasury Consulting Group. These are our contact details. Very soon we are coming up with a dedicated course on 10K, how to read the 10K. But offend or no offend, paid media and or the Narad media of India. One thing which is very clear and we need to appreciate always, the way American bank reports, no bank in the world ever do. Goldman, JP, and HSBC, specifically speaking, these three banks' annual report are more than a book for MBA students. But I doubt there is hardly any MBA institution where these 10Ks are ever taught. And I also doubt whether MBA students are also interested to learn from their 10Ks, which are, by the way, available free of cost. Every year, they bring more and more information in their 10K compared to Basel 3, different compliances, what they are up to, what new they are doing, and so on and so forth, changing in the regulatory guidelines. And they are making their 10Ks more meaningful. Although as we speak, their 10Ks are already more than enough meaningful. And we also need to understand very carefully that 10Ks are one of the wonderful products we have in the world of finance. And like they cover credit derivatives, FX, equity derivatives, and whatnot. With this, we thank you very much, guys, and have a great time ahead.